Bitcoin just dropped over $5,000 in a matter of hours. Altcoins are seeing an absolute bloodbath, and the world is seemingly going risk off on fears of Chinese systemic risk from Evergrande. What is going on with markets? I'm going to take a look at all the news and all of the charts right now, figure out where this is likely to end. Don't miss this one, guys. Stay tuned. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started and start talking about this bloodbath, please go ahead, subscribe to the channel, hit that like button right down below. You can do it however you want. These fingers, elbows, nose, just hit that like button. Smash it with your face. Smash the like button with your face. Guys, as you know, I am giving away $5,000. All you have to do is subscribe to the channel and hit the link down below in the description. You can sign up as many times as you want. Now that we have that out of the way, I know why everyone's here. They want to know what the hell is going on with the markets. Well, guys, it seems that there is quite a bit going on. And of course, the minute we see price start to drop, it's nothing but bad news. Nothing but bad news. Following the price of Bitcoin drop, all of a sudden we start to see all of the FUD and things that are going wrong, including the fact that one Bitcoin transaction apparently is as bad for the environment as throwing away two iPhones. We talked about that last week. I'm not going to talk about that one today. So what I'm going to do now, we're going to go through all of these stories, guys. There's a lot. I'm going to try to get through it rather quickly. We're going to go through all these stories, and once we get through them, we are going to look at the charts as well and try to figure out what is going on. I'm hearing from you guys over in the comments that there's a lag. Obviously, there's nothing I can do about that. So we're going to just keep on pushing and see what happens. All right, guys, here we go. First piece of news that we have. Bitcoin plummets 4K in a day, leaving 800 million in liquidations. Market watch. That's the first story. First of all, this is when Bitcoin had only dropped to 44.5 a few hours ago. Now it's dropped much deeper, obviously, even below 43K. But the story here still, as usual, is liquidations and leverage. Always liquidations and leverage. A small move triggers a much bigger drop in the market because traders get liquidated. If this was at 800 million when price was merely at 44.5, I can't imagine it's well over a billion now, obviously, with price dropping lower. That is always the main story when you see a major Bitcoin dip, because it turns a small dip into a leverage cascade in a much bigger dip. So moving on here, Bitcoin extends slide below 43K as Binance Bitcoin stash grows to May crash levels. This is an interesting story here. The reason this is interesting is because we hear all the time about outflows from exchanges, right? We hear all this money is moving off Coinbase, and it is, and into cold storage. And that means there's going to be a supply shortage and all these things. But Binance tends to buck the trend. I was actually the first person who ever reported this and talked about it because I asked CZ about it on my podcast. You can see that on my channel. I said, listen, so, we're seeing these major outflows from exchanges. And he said, not us. I said, what? It's being reported everywhere. He's like, yeah, I don't know where they get those numbers, but it's not the case. There's always an influx seemingly of Bitcoin into Binance. And right now it's bucking the trend, and there's been a major inflow, and they're holding their most Bitcoin ever. But let's talk about why. The reason that happens on Binance is because institutional Bitcoin investors do not trade on Binance. So as scary as this headline is, that's not really the case, and it's not what's important. Why do people go to Binance? Why do they move their Bitcoin there? They move their Bitcoin there to trade altcoins. So no surprise that there would be a huge Bitcoin stash here, especially as people are panicking out of their altcoins, increasing the amount of Bitcoin being held by Binance. Binance is not where American companies are going to buy Bitcoin and move it into custody. That's happening on Coinbase. That's why we are seeing that trend there. Now let's take a look here at this one. Bitcoin slips below 45K as S&P 500 futures drop. Stablecoin regulation fears resurface. September dips paved the way for larger bull runs in 13 and 17. We've talked a lot about the fact that September tends to be low. I'm not a big fan of seasonality, but clearly we're seeing a September dip once again. But more importantly here is understanding the systemic risk of what is happening in China and Evergrande. We're seeing a lot of analysts starting to panic and talk about major stock market corrections and major dips across the board. And of course, we talked about this even last March. When everything starts to drop, when there's panic, Bitcoin tends to sell off as well very quickly, but then bounce much harder. When you talk about asset correlation, Bitcoin is a beautifully uncorrelated asset over a long period of time, but in short periods of time, everything becomes correlated in a black swan event or a crash, and Bitcoin is no different. That's why Bitcoin went 10 days ahead of the stock market, March 12th, 2020. The stock market bottomed around March 22nd or 23rd and bounced and went up 13, 14x while the stock market merely doubled, right? So you do have these correlated moments where there's a ton of risk off, but also it could just be whales taking advantage of that news to move coins through the market. But what we're talking about here is the various FUD that we're seeing, right? Stablecoin regulation fears resurface. We'll talk about in a minute. The New York Times ran a pretty big article on the risks of stablecoins that got a lot of people's attention, means that regulation is definitely coming. And then, of course, jumping in to Evergrande. Bitcoin falls below 45. This is now on Bloomberg as global market rout infects crypto. Cryptocurrencies take a beating along with other risk assets. Analysts say China Evergrande worries are spilling over. My friend Sahil Bloom, you guys probably know him by now, does these amazing threads. He writes for my newsletter. You guys should check him out, SAHILBLOOM on Twitter. And you can see he did an entire thread just a few hours ago, not even maybe, 2 hours ago almost, on Evergrande if you don't understand. But the gist of the story on Evergrande, for anyone who doesn't know, just rewind to 2008 for Lehman Brothers or any bank in the United States. They're a huge developer in China, extremely over leveraged, continued to borrow money to build, borrow money to build, borrow money to build. Well, there came a time when there was no demand for that building. There was not enough people making payments and rent, and all of a sudden they couldn't pay their interest on all their loans. Of course, that left a lot of people who have made deposits and are not necessarily going to end up getting a house. And of course, just like in 2008, that leaves this huge risk of an entire system collapse. That's exactly what we're opting out of with Bitcoin. Exactly the reason that we want to have Bitcoin in the first place. So yes, we may see some risk across the board. It's leading even Morgan Stanley seeing a growing risk of a 20% drop in the S&P 500. This is not even because of Evergrande. They're just part of the story, but they're just saying they see this potential drop because stocks are overheated. The chart looks bad. Fundamentals are looking bad. And a lot are saying it's vulnerable. But what I find so funny about this is that they talk about the fire and ice outcomes that they dub on Wall Street for what could happen to the market. Fire being a 10% drop, ice being a 20% drop. Neither of those scenarios are the market rising, which it has continued to do every single time anyone calls for a correction. I think the market's due for a correction is too, but I'm not the idiot that's going to try to call the top of the stock market and fade the Fed when they're endlessly printing money to sustain this. And I think another important aspect of this, if you think about it, is the fact that China is in a bad situation here, but they're likely to print a lot of money. If China announces that they're going to bail out Evergrande, which we can assume that they likely are, well, I would imagine the market will bounce massively and it will be a bottom. I know that you guys are asking me about my leverage trade. I talked about it on Twitter and the newsletter. I'm going to go into that momentarily. Let's look at the Bitcoin chart right now. As you can see here, we have the weekly Bitcoin chart. I have been screaming forever that we never got the retest to 42K. I didn't know if we're going to get it. We still might not. I thought we were correcting here. This was a beautiful, beautiful rise. Of course, we had the down candle. Last week's candle, pretty good right here. Nice little daily hammer. You could call it a long-legged doji, any definition you want. But right now we're seeing another drop on the weekly. The question is, it's only Monday. Will the weekly close back up here, giving us another long wick down? Like, look at all these long wick downs showing you when there's demand. Maybe we come down and finally touch this 41,986 level on Coinbase. It's 42,000 on Bitstamp, and retest that level from the top of the move all the way up from 20,000. That has not happened yet. At this point, would not be a surprise, obviously, after this drop. That's just looking at the weekly. Last week's candle, pretty good. We need confirmation on this candle. Now, let's look at the daily chart. There's a lot to dig into here on the daily chart. Golden cross, as I said, lagging indicators, a result of the price moving up. Yes, it was nice that it interacted directly with price and we saw a little bump, but now we're seeing price dump down below both the 50 and 200 MA. It would be really funny to see it close all the way back up here, but that's not something I'm looking for. What's interesting and something that I did not notice and was not paying attention to is that we have the Fibonacci levels from 65 all the way down to the bottom at 28,600. Well, we have a golden pocket retrace up, right? That means a retracement back up to between the 61 and 65% level. That's where Bitcoin loves to get rejected, both going up and going down. Something that I probably should have noticed, did not have pull up on my chart. So no surprises actually that we were rejected here around 52, 53. Does not mean it's a top and we're going way down. Actually, what usually happens is you get rejected if you're back in an uptrend. You get rejected at the golden pocket, and then you bounce down to either the 38.2 or the 23.6. The 38.2 is 42,464, the exact bottom of this move thus far. Rejected at the golden pocket, drop back down to the 38.2. So this is going to definitely bear watching. Now, drilling into the 4 hour, you can see the smaller fibs on this move, 53,000 down to 42,891, bounced almost to the 61.8%. I do not call this a bear flag. Some would call this a bear flag, but I would say that this is a ascending channel. So for it to be an ascending channel, it merely broke down and hit the bottom of the channel right here. That's the target, 42,900. And now we have a potential bullish SFP below that level. That means you get this wick below the low, lots of liquidity to move up. So right now we have more volume buying, assuming this candle, strong assumption. But wherever this candle closes, it's going to be the highest volume candle of this entire move since the dump. If it closes green, that would be a very, very good sign. But we do have a rejection from the bottom of this channel. Guys, the TA is mixed. I'm not telling you what to do here. I have no idea what's going to happen. I can just tell you this is a descending channel, dropped, hit the target right there. If you did consider it a bear flag, by the way, the target would be down around 33,000 based on the length of this flagpole right here. But as you can see, wick down below, perfect retest as resistance. So you want to see it back up in this channel and heading up. But that's the look at the 4 hour chart right there. And this is my trade on the 4 hour, as I discussed with you guys. When I'm in profit, I tend to move my stops into profit. My premise of this trade was to catch a bottom move for a very long move to the upside. So listen, I did not maximize the potential profit of this trade. I entered down here at 44,700, right in this area, as you guys know, right before the Walmart candle. I almost stopped out, saw all this movement up here. And then it came Friday. I was on the afternoon stream. I said, I'm not going to manage this during the weekend. I'm moving my stops up into profit below support. This was the main support. I could have even moved them a bit higher, but I thought maybe below this candle right here, enough room for a wick, 46,244. Obviously, I stopped out on that dump. So I made quite a bit of money on the move, 44.7 up to 46,244. But I could have, of course, in hindsight, sold back up higher and made more money. But the reason I didn't is because that wasn't the premise of my trade. I was looking for a move up to here and easily above that potentially if I could. I don't take leverage trades often. It's not something that I like to do. I did it because I saw immense upside. That premise was completely broken on this move down. So I woke up, stopped out in profit, but not nearly as much profit as I could have had. But now we have another wick down below this wick here, back into the range the price was trading in and we finally broke out of, but we are below a lot of supply and a lot of resistance. This is a really interesting place to sit on the sidelines and watch, in my opinion. I'm not interested, but if this candle right here closes like this and starts to make moves back above these levels, well, we've got really good volume and a really good bounce. But you know how I trade, guys. Bullish divergence with RSI. And because I was not watching the charts this weekend, I did not see the bearish divergence with RSI at the top. Did not quite hit overbought. Did not. Got to 69.65, but basically the same as hitting overbought. Oversold bullish divergence up, overbought bearish divergence down. So what will I be watching for? I think everybody here knows, right? I'll be looking for a slightly low, a lower low here at some point on a close, not on a wick, and a higher low on RSI for another bullish divergence and to head back up. That's a trade that I would take once again. I am not touching it before that. And I want to just briefly touch on the dollar index, the DXY, because this is what everyone's talking about at the moment. Dollar strength tends to mean a dip on other assets. Stocks, sometimes Bitcoin, certainly metals go down when the dollar goes up. They go up when the dollar goes down. That's why we're seeing this massive devaluation of the dollar with printing and the stock market rising tremendously. It's all about the denominator, but the dollar has been showing a bit of strength. I think we could put in, I talked about this last week in the newsletter. I think we could put in a head and shoulders here after this move up and see it drop back down below. On a macro level, it still looks terrible. But when you see a risk off scenario like this, people fly into the dollar. The dollar is considered the safe haven asset, the global reserve currency. So when you see risk off, people flood into the dollar goes up, everything else goes down. So it will be interesting to see if it can finally make a move above 93.437 here, really break through here. This idea would be invalidated of a head and shoulders with a break above the head. You can't have a shoulder that goes higher than the head. I'm going to go over here really quick, take a look at your comments. Seems that there's a hell of a lot going on over there and I'm never going to catch up. So I'm just going to keep on going with the news. This is the big story right now. Stablecoin feature in New York Times signals regulation is coming. Designating them as systemically risky and thus eligible for oversight is one option available, the article said. So the New York Times did a huge feature on stablecoins, calling them a huge risk to the economy. Not only that, I have to find the quote here, but they said, saying the rush to bring stablecoins under regulatory control might be, quote, the most important conversation in Washington financial circles this year. Okay, that's a little bit terrifying. But also, did you ever imagine that the most important conversation in finance would be stablecoins and cryptocurrency? We have made it, and that's what's important here. We knew that regulation was coming no matter what, and we've always hoped that regulation would be sensible. That hope is dimming dramatically with Goldman Gary Gensler over there and his receding hairline in anger. Mine's receding too. It's you're allowed to make a joke about other hairlines when your hairline is also going back. Nothing against Gary's hair. But the fact is, they are going to regulate stablecoins. But let's dive in here to how they're potentially going to do it, because none of this makes much sense. And it's clearly an emotional or just an heavy-handed reaction. According to the Times, here are the most likely options that regulators could use to corral stablecoins. 1, designate them as risk to the system. Under the Dodd-Frank Act, regulators have the power to deem payments activity as systemically risky and thus under regulatory control, even if the activity only poses a potential risk down the road. Holy shit, that's vague. Are you serious? I have determined that 39-cent stamps are systemically risky and we should regulate them. I don't know. Choose anything. Bonobos. Spider monkeys. Spider monkeys, systemic risk to financial system because they've been hanging out around Fort Knox. We need to regulate them. So basically, the Fed can regulate anything that they deem as risky without giving a reason as to why they think it's risky and say that it could maybe be a risk down the road. Okay, that's number 1. 2, call them securities. The article notes U.S. Securities and Exchange Commission Gary Gensler has recently said that stablecoins may well be securities and thus potentially subject to SEC regulation. He also started calling them stable value currencies to try to change the language so that it would be more likely that they could be deemed securities. But how can you possibly deem them securities? There's a very clear test. It's ancient, the Howey test, on what is deemed a security. And one of the main rules is there has to be an expectation of profit, because that is rule number 2 as to what would make something an investment contract. So if it's an investment contract, it becomes a security. There's no expectation of profit with stablecoins. And then I've seen people make the argument, well, what if you stake your stablecoins? What if you stake them? There's an expectation of profit. That's like saying, what if you invest your dollar? Does the dollar all of a sudden become a security because you put it in a bank account to earn your 0.00001% interest? No, obviously not. That's absurd. So this is completely ridiculous. Using their own definition that they've created of what would be a security, stablecoins clearly do not count. Treat them as money market mutual funds, which some experts say they resemble and which are regulated. They're saying they resemble those because they're backed by a bunch of different securities. But no, same reason as number 2, money market mutual funds. You have an expectation of profit when you put your money into them. That's why you put your money into a money market mutual fund. That is not the case with a stablecoin. The stablecoin is a tool. Regulate them like they're banks, potentially bringing stablecoins under the regulatory oversight of the Office of the Comptroller of Currency, the OCC. This option could lead to deposit insurance for stablecoin investors. That would be nice. And thus diffuse a major criticism of stablecoins by some, namely that investors are unprotected should the assets underpinning the stablecoins go bad or if there's a run on the stablecoin. Oh, the irony. First of all, okay, fine. Maybe this would be a good route. They would come under the OCC, regulate them like they're a bank. This is something that we saw senators and congressmen calling for last year. Maxine Waters, I believe, was on the leading edge of that ridiculous argument. But then at least we could get insurance. We would have clarity. They would be they would be regulated. But oh my God, do we do this with stocks? Like, do we do this with any of our other financial instruments? We just talked about Evergrande, right? Evergrande's crappy loans and poor financial behavior is systemic risk to the entire world economy because they're not backed in the way that they should be, and that could cause for a collapse. But yes, let's apply that rule to stablecoins, which we know actually are backed, especially USDC, which is backed in a federal bank in New York, which is the hardest state in the union, by high grade investments. And Tether's improved theirs as well. So I think that this is also absurd, but maybe this would be the best route because they would be regulated like banks. We don't want that, but maybe that's a likely route. And of course, number 5, issue a competing CBDC, central bank digital currencies, something the Federal Reserve is studying. However, given privacy concerns related to CBDCs, a US CBDC is unlikely to substantially attract users away from stablecoins, the article observes. Yeah, no shit. No shit. Nobody wants to use the stable coin backed by the United States federal bank and government because they'll know every single transaction that we have and they'll have perfect control of the money supply anytime they want to print. Want your taxes? They can just take your taxes right out of your wallet. You owe someone money, take that money right out of your wallet. Nobody wants that. This would drive more interest in Bitcoin and potentially stable coins as well. This is all misdirection. Every single one of these is honestly a poor assessment of what stable coins are and a poor framework. They're basically just not doing the work and trying to retroactively fit a square peg into a round hole right now because there's just no framework that works yet for stable coins. And it seems they're not willing to do the work to make sense. El Salvador buys the Bitcoin dip as top coins tumble amid a broader crypto market crash. El Salvador's president moves to add 150 Bitcoin to the country's stash. I believe now they have 700 coins. If I read it correctly, it was an amazing tweet. He basically said, yeah, we bought the dip. And they said, they can't win when you buy the dips. And then he said, presidential advice. Yes, financial advice. We say not financial advice. I guess this dude's such a Chad and is not being regulated for what he tweets. And he can say, yes, presidential advice. Now, listen, they bought the dip. I should say they bought a dip. We don't know if it was the dip. But this is really important and goes to the entire topic of what we're talking about today, the best strategy. What is the best strategy? Buy dips, dollar cost average, and wait. That's it. It's so simple and nobody wants to do it. You should buy this dip if you're willing to wait 10 years because you believe that Bitcoin's going to be a lot higher in 10 years than now. If you're going to panic sell it if it goes down $2,000 more, you absolutely should not buy the dip because then you're trading and you're emotional. But if you have a long time horizon and price just dropped 10% in a day, that's an opportunity to buy the dip and add to your stack. And if you're dollar cost averaging, it doesn't matter what the price did. You shouldn't even be looking. You should just be buying on Monday at 9 a.m. or whenever you have set to do your dollar cost average and check it quarterly, yearly, or even every couple years. Guys, this is what MicroStrategy does. Every time he gets money, he buys Bitcoin regardless of the price. This is what countries are doing. This is what you should probably be doing. This is the best approach for investors in any asset, not just Bitcoin, that they believe will rise over time. This is how generational wealth has been acquired since the beginning of markets. Do you think that the wealthiest people in the world have ever checked the chart and said, oh shit, price dropped 10%, it's going down to zero, I need to sell all of my assets? No. They're on automated buying. They don't even know charts exist. They've probably never even heard of technical analysis. Do what Bukele is doing. Buy dips, dollar cost average, be patient. An ancient Bitcoin stash worth 30 million just moved. The stash was worth 8,195 when it was first deposited. This is a cool story. 616 Bitcoins has been dormant for 9 years. They just moved them. The price of Bitcoin when they had the 616 Bitcoins originally was $13. $13. When they moved it, it was 47,811. How big of a gain is that? 358,655% over 9 years. Does this speak to what I just said? Doesn't this speak to what I just said? This is the people who make the most money are the ones who forget about their investments. I had Mark Yusko on my podcast, and he said, do you know what the best performing accounts on Fidelity are? The dead people. Why? Because they're dead. Nobody closed their account and they have continued without anyone actively managing them to grow with time. Same with these dormant wallets. Imagine finding Bitcoin you forgot about. The best strategy you could have ever had was to forget about it. And that's what I'm talking about here with buying the dips and dollar cost averaging. The hits just keep on coming for Binance and more FUD here. U.S. officials now investigating Binance for potential insider trading, market manipulation report. So we know that obviously regulators have been looking into Binance in general, but now they've added insider trading and market manipulation as a potential thing they're looking into. Be very clear here. This is not an accusation yet. It is clearly something that they're looking into, and they've started to look at potential witnesses. This would be something like front running the order books or something like that. We have no idea what will happen here, but clearly regulators are really, really digging into Binance and exchanges right now. U.S. Homeland Security signs $1.36 million contract with Coinbase. Coinbase's new deal with the U.S. government is around 40 times bigger than its last. Now, we all know that Coinbase has been doing deals with the government in general, but this is a very big one. It's basically for software solutions, application development software, business applications. I'm curious as to your guys' thoughts. I don't really have a thought. Honestly, I have not formulated an opinion on this. What are your thoughts about Coinbase working with the government and taking government contracts? Do you see that as any conflict? Do you think that it's a good thing that cryptocurrency companies are able to dig in with the government and work with them? Do you think that this is a violation by Coinbase of working with the enemy? I'm curious what you guys think about this. I would love to hear your comments. Hacker steals 12 million in wrapped Bitcoin from DeFi platform pNetwork. We don't know exactly how this happened. It's not very clear. They are offering, I believe, a $1.5 million bounty. Just showing you. By the way, I hold pNetwork. I'm a fan of them. I have the token. I've been staking it since it started, just to be completely transparent. And I believe in their project. I believe in their company. Everything, not named Bitcoin, but all of these projects, we've seen small hacks here and there. This is par for the course and just reminds us that we're early, we're in a nascent industry, and with the tremendous ability to make money comes the risk. Now, this is not a risk to your everyday investor. This was just hacked from the project. Not really a big deal for anyone who's holding the coin, but just a reminder that there is risk in this space. We are early, and that we see these DeFi hacks every couple weeks at a minimum. Finally, Christie to sell some of the earliest NFTs and only for ETH. A full set of 31 curio cards, including a misprint, is expected to fetch between 870 grand and 1.3 million. Now, the story here is not that ETH is selling the earliest NFTs. That Christie's is selling the earliest NFTs. We've seen Sotheby's, Christie's, all the auction houses now getting in on it. What I love here is that they're selling it for Ethereum. That's the only options for someone to buy it with Ethereum. It means that we're seeing really more adoption and more interest in holding Ethereum as the asset by the auction house when they're making these sales and by the person who's doing the actual auction. Really bullish to see that this is not a sale in US dollars, but is a sale in Ethereum. Guys, that was exhausting. That's everything that I have today, but not really, because this afternoon I'm going to be digging in really heavily again at 1:30 p.m. EDT to talk about all of this and get much deeper. Also take a look at the altcoin charts really deeply and see if we can find some nice potential bottom, some opportunities to buy the dip if we think that this is going to reverse. Now, just to review, I took that leverage trade. I want people to be clear. Leverage is not a tool for the people who are rookies and have not traded for a long time. I am always buying the dip as an investor. I'm always bullish on Bitcoin. I saw a lot of comments on Twitter that said, "Oh, you stopped out, you closed it. You must not want to buy Bitcoin. It's going to 150K, you idiot." Those are people who don't understand the difference between investing and trading and the difference between spot and leverage. I don't sell my spot positions, but a leverage position is a trade. And when your idea is invalidated, you exit that trade. That's what happened. I am out of it, and I will continue looking for a bullish divergence with RSI on the 4-hour. Guys, please show up again at 1:30 p.m. EDT. I'm going to have a longer stream and have a lot more time to dig into all this. Also, at that point, I'll be able to interact with you guys a lot more, take a lot more questions. Just really quick, you guys do have a couple opinions here. Government will strong arm Coinbase to get who they want. That's potentially true, but I can't speak to that being the fact. But it's interesting to see your opinions. Coinbase will be massive, I guess. This has been my argument all along. I'm an investor in Coinbase stock. I keep buying it. I think they're going to be one of the biggest companies in the world. That is not a statement on what I think of Coinbase. I don't even use the platform. I don't use it. I don't like it. It freezes. It has downtime. It's just not my preferred platform, but I think they'll be the biggest cryptocurrency company that's publicly traded, and that means it's an investment opportunity for me. This may come as a shock, but there are a lot of dumb people on Twitter. Kristen, I don't call them dumb. I think there's people are just emotional and they haven't really dug in and they don't understand. And that's a huge risk when you're tweeting about things because people don't have context. I try very hard to keep the context and to make it clear exactly what I'm doing and why, but someone who reads one tweet in a vacuum may not understand exactly what is happening, guys. That is all I have for you today. Check out everything I got going down in the description. Sign up for the newsletter, and until 1:30 p.m. Eastern Daily Time today. Peace.
That's dope.